It's Wednesday, May 5th. This is The Street Live. I'm Catherine Ross, and I am joined by Jim Cramer. Jim, what are you watching in the markets right here, right now?
Right now, I'm watching a couple of stocks that are trying so hard to stay above water, and that's Advanced Micro, Marvell, Broadcom. They're all hanging by a thread. Nvidia, they're all down from where they opened, and this is an important retest, and I think the test is going to hold. But I recognize that there's just people who still want to get out of the semiconductors in the worst way and continue to do so.
It's interesting, Jim. So Edward Moya, senior market analyst at Wanda, said that Elon Musk's SNL appearance is fueling this rally in Dogecoin that we're seeing this week. Now, we've hit a lot on the meme stocks, but this is quite literally a meme cryptocurrency. So do you think that the Reddit and the Musk love is enough to keep this crypto going?
I guess so. I mean, I sold half my Ethereum yesterday. Why not? I mean, I bought it at, like, I don't know, they're like Dogecoin, and I just felt like, let's go buy something real. Dogecoin people, there's no supply, so they should be taking profits and recycling into other things, but they don't do it. And the reason why it ends badly is because when there are no sellers whatsoever, that means there's going to be a moment where there's nothing but sellers. So it's good to scale out if you own some Dogecoin.
So one thing that really drove the markets yesterday was Janet Yellen's comments, because she said that interest rates may have to rise because of overheating, which led to the negativity. So Yellen later had to clarify these comments, and CNN ran a story saying that Janet Yellen just proved markets can't handle the truth. Do you agree with that, Jim?
Oh, that's so stupid. Jesus Christ. I mean, when she took it back, I understand she did watch my quarterback program. Thank you. No, I mean, look. Powell has said, listen, we're going to take some inflation because we have a mission, and the mission is to make it so that there's equality of a comeback. And I think there's a lot of these stuffed shirts, jackasses, whatever, who don't really give a damn about the people who are unemployed and disenfranchised and can't get a job. And that's you had very good unemployment among black people under Trump. We did have a boom. I mean, I think everybody has to recognize we had a boom. But that doesn't mean we can't do it again. But it's not even. And the white people are doing better. Rich white people are doing better. And Powell has a conscience. And he's willing to take the higher price of steel, for heaven's sake, in order to be able to put more people to work. So, I mean, I'm with Powell. And I think the people who criticize him right now, they are people who, frankly, are self-interested for the most part. Or are selfish. Now, of course, there's other people who just criticize because they took certain textbooks. But I just find that he's a breath of fresh air.
So after our show yesterday, Jim, you did pen a Real Money column aptly titled "We've Got a No-Win Situation," which does, talk about what Yellen was saying in the comments. And you also said that, I'm quoting you, "I also know that if you sell now, you might have to buy back stock at a level that you can't get unless you are so fleet of foot that you dart in and out." So
Right.
How can investors protect themselves while also avoiding the selling FOMO?
Well, I mean, look, I think you got to know what you own. I mean, look, when we bought Eli Lilly, we were bad. We bought into the Alzheimer's, but we always knew that there was another Eli Lilly underneath it, which is a very good company. And Eli Lilly's up very nicely. I would say that that there's another company, Pfizer, that did a lot of great things, and there you can get Pfizer. Well, now it's up $1. I mean, I figured it had to be, but if you know what you own, and the stock goes down, you're thrilled. You can buy more. Now, Warren Buffett would tell you that, but then Warren Buffett would say he would eschew helping anyone.
Well, speaking of buying more, Jim, on Mad Money last night, you were talking about Cleveland Cliffs and also talking about the second chance market, which we covered yesterday. But why is Cleveland Cliffs for you a buy amid the inflation fears that Yellen has now triggered?
This is lowest cost iron, because they have big iron. And they've got this absolutely brilliant series of acquisitions they made, which capped off by ArcelorMittal. And I think that when I look at the Arcelor deal, I say to myself, that was just so brilliant. And I just think that, you're looking at a company that, frankly, has just it reinvented itself in a fantastic way. And, my hat is off to that management team, which is just brilliant. And it's led by Gonzalez. And what he's done. Oh, look at that thing. With 12 million shares, it's a 20.56. That one is going, it's not done. I think he can go much higher. I genuinely do, because the acquisitions were all made at great prices, and no one's really talking about the damn thing. And it's just there's some guys who don't like the CEO, which is just nuts because he's so good. Paying down debt rather radically, with prices going up, and up. And look, if you want to, you can buy Nucor instead. That's in the bullpen. But they made a lot of major moves to get their company into good shape, and they succeeded. And it was in very bad shape. So I'm very proud of them. They've done a very good job.
Well, let's focus in on another segment that you did on Mad Money last night, Jim, which is your off the chart segment, because Dan Fitzpatrick showed the charts of UPS and FedEx, and he showed that, based on the charts, he likes FedEx here. However, you said that UPS overall is the better company. So I'm wondering, from an educational perspective, how can investors compare a stock's chart to the company's fundamentals and the company itself?
Okay, well, the chart is a depiction of how the stock is done. And so you're betting that can compel you to a decision to buy or sell based on what it's done. I believe in where it's going to, not in where it's done. So I'm from a very different school. But that's one of the reasons why I do off the charts every Tuesday, because I want to show both sides. And it was very interesting because he picked FedEx. Right now, FedEx is doing better. Well, no, look at that. UPS is just past FedEx. But I think that it was a very creative approach that he had, looking at these zigzags. And I suggest that people look at his stuff in Real Money. Does a very good job.
So I want to continue our focus on American companies by talking about General Motors. They expect that they will have a strong first half of the year despite all of the pressure that they faced with the chip shortage. So, Jim, with Ford and GM making these EV plays and coming back to the market, what does this mean for the return of our classic American car companies?
Well, I think that they're both great. I think Ford's going to surprise, because this fire that was in a Japanese foundry, it's already operating at 50%. It's going to be operating 100% in maybe 30 days. General Motors was just a great quarter. They sold a lot of cars. They did a very good job with finance. They can't get a lot of their models. There is a chip shortage that's affected them. They'll sell anything they can get. It's the best market for autos I've ever seen in my life.
Well, and then we've got Caesars, which was your mad dash. So Action Alerts Plus, for those of you who are not members, does own Wynn. So, Jim, should investors eye a gambling stock if they're focused on reopening plays after Caesars' earnings call?
They should buy Wynn. I mean, Wynn is more balanced. Wynn's only up $2. Wynn traded as high as 143. It's at 126. Wynn's going to have numbers. This is a little gun to my head situation tomorrow, but I don't care. I'll buy more if it's down, because this is the time to own Wynn.
And Jim, it's time to talk about some IPOs that we've got. We've got The Honest Company coming public today, and then Krispy Kreme filed their confidential IPO paperwork. So do you think that this market is still too hot for IPOs and SPACs?
Well, I said Krispy Kreme, this is a crummy deal, and they're bringing it back, and they'll have done some streamlining, and I'll think, oh, God, why do they have to bring it back? Honest has been on the pipe for a long time. They held off, and they finally got the okay to go because they had some numbers. But, look, we're in that hazardous time where, at least like with Endeavor, where they're my agent, they gave you a chance to make money. A lot of these deals, you're not going to make money.
Well, Jim, it is Cinco de Mayo, and I know that you have a big plan for your restaurant, so I'm looking forward to hearing all about that. I saw your pictures on Facebook or Twitter.
The rules, they haven't changed all the rules yet. So I have to have a very small private party. When they change the rule, because I'm not outdoors. I'm in the back if the weather's not great, which it looks like it won't be. I'm not outdoors, so there's this, we're not allowed to, look, it's a bar, and you're not allowed to sit at the bar. Now, isn't that perfect? But that's
but Jim, it's still the first step. You got to be positive. It's still the first step to a grander reopening.
I agree, but we have a new manager, and we got to see if the place runs smoothly before we have real people come by. Last night we did the same thing with the longshoreman. Oz Perlman, OZ, is such a great mentalist, came by and did some entertaining. He lives across the street from the place, and it was just wondrous. He fooled everybody.
Well, Jim, I look forward to hearing more from about your restaurants on Twitter. With that, thank you for joining us today. We are now heading over to our Action Alerts Plus Daily Rundown show. We will be talking more about Ford and other stocks that you want to hear about because the portfolio has been making some add-ons to their current names. So join us over there on actionalertsplus.com. I'm Catherine Ross, and we'll see you tomorrow.